Hi, this is Jack Duval, CEO of Bantam Incorporated, a private investment office in New York. Today, I wanted to do a brief video on one of our investment strategies, which is to use asset liability management techniques, and that's known as ALM. And it's used frequently in the pension and insurance industries. And basically, what it means is if you're a pension, certainly you have what's called known liabilities. So you know when the outflows are needed because you know the ages of your pensioners and people that are coming into the distribution phase. You also know the amount of money that's coming in from current workers in pension contributions. And you can just do those actuarial calculations, and you can figure out how much money you need this year, next year, and on down the line. And then from that, you can match your assets to that. So if you need X amount of money in 5 years, for instance, you can buy a 5-year US Treasury bond or note, and that investment will mature, and that money will be there for you to distribute in 5 years. So we do the same thing for individual investors. We try to, go through in the profiling process and really drill down on the known liabilities. Could be college education for kids or grandkids, could be house or second house, or starting a new business. Could be all kinds of things. But if you plan for them, then you can invest accordingly. So if you have a known outflow in 3 years, and that's a known liability, and you can set aside assets for that. Anything that's under 5 years, kind of my way of thinking, is should be in cash or very short term. U.S. Treasuries. You could do, like I talked about, you could buy a 5-year Treasury for a outflow in 5 years. You could buy a zero coupon bond, something like that. For more than 5 years, you can go a little bit further out on the risk continuum. You can get into corporate bonds. And then if you go, say beyond 6, 7 years, you could get into equities. I would say at a very bare minimum, you have to have a 5-year horizon for equities. But the further out you go, the more you can get into equities. So that's just a simple way of managing risks and making sure that the money is there when you need it. Asset liability management. So I hope that's been helpful and informative. Thank you for listening. This is Jack Duval for Bantam Incorporated.